The year 2025 was a spectacular chapter for the markets, a software boom that felt unstoppable. But 2026 is different. It's about physical AI and the power grid. Investors poured capital into cloud companies, application developers, digital platforms, chasing the promise of infinite scale and high margins. The narrative was simple and powerful. Code was conquering the world. Stock charts climbed, fueled by dreams of exponential growth built on lines of software. But as we stand here today, January 11, 2026, the landscape is undergoing a profound and irreversible shift. The next great wave will not be written in code alone. It will be built from metal, silicon, and atoms. The focus is moving from virtual to physical, from digital services to intelligent robots and the factories they will operate, and the electrical grid that must sustain them. The very attribute that made software so attractive is now becoming a limitation. Software is cheap to replicate. A single program can reach millions at virtually no marginal cost. Low entry costs let rivals emerge overnight, pushing down margins and eroding pricing power. As powerful tools and LLMs spread, sophisticated apps are easier and faster to build. Barriers fall. Proprietary code alone loses its edge. Many firms now compete on minor features or marketing budgets. Investors must look beyond elegant code toward durable physical advantages, factories, supply chains, and critical energy infrastructure. Software can analyze, plan, decide. Physical AI gives it hands and feet to act in the messy, unstructured physical world. This is the dawn of the intelligent robot, not science fiction. Practical machines are deployed in warehouses, farms, hospitals, factory floors. They lift, sort, weld, and deliver with precision and endurance, reshaping labor markets and productivity. Building reliable robots demands advanced sensors, powerful motors, sophisticated control systems, and intelligent chips. Beyond the sale comes service, maintenance, updates, replacements, creating long-term recurring revenue. AI models are voracious consumers of computational power, trained in massive data centers packed with tens of thousands of specialized chips. The world's leading tech firms see it clearly. The future of AI depends on controlling the underlying hardware. The battleground has moved from apps to silicon. Companies are designing AI accelerators optimized for training and inference. Designs prioritize speed and efficiency because electricity costs matter. Advanced chips require foundries costing tens of billions and years to build, forming formidable moats and new gatekeepers. Performance or efficiency leads can translate into decisive advantage. The best opportunities lie with those who build the hardware, not just use AI. Section 5, the unseen engine, nuclear energy's critical comeback. All of this technology has a voracious, non-negotiable need: electricity. AI and automation will strain existing grids. Wind and solar are crucial, but intermittent. Grid-scale storage is possible, yet prohibitively expensive for heavy industry. Nuclear is uniquely positioned to solve this: clean, reliable, high density, and 24/7. A new generation is safer, more efficient, and more economical. Small modular reactors, SMRs, are compact, standardized, factory manufactured. SMRs cut construction costs and timelines, sit closer to demand, and scale with the 21st century economy. Major industrial shifts do not happen overnight. They follow years of planning, investment, execution. The seeds were planted in 2024 and 2025. Foundry plans, robot lines, SMR applications. Now plans turn into action, and action into revenue. Markets react to tangible progress: signed contracts, rising backlogs, accelerating capital expenditures. Attention shifts to manufacturing orders, construction backlogs, and long-term power purchase agreements. Expect performance to reflect this reality. capital rotating from richly valued high-competition software into industrial and energy leaders. In a market crowded with noise and complexity, the most powerful strategies are often the simplest. The core thesis: economic gravity is shifting from the virtual to the physical, using bits to command atoms. Value will be created by software and AI that orchestrate action in the real world. Look beyond another layer of digital abstraction, toward bridges between digital and physical. The value is at the point of action. The software is the brain, but hardware and energy are the body. The most valuable companies will integrate brain and body into complete systems. We propose a clear three-pronged trade for 2026. First, robotics manufacturers and automation specialists with real deployments. Prefer firms beyond prototype stage. Look for recurring revenue from software, maintenance, and service agreements. Second, advanced semiconductors, AI accelerators and efficient processors, essential suppliers with pricing power and backlogs. Also consider the companies manufacturing the specialized equipment, critical choke points. Third, nuclear infrastructure and engineering, SMR builders, precision component manufacturers, and forward-thinking utilities supplying firm, low-carbon power. No thesis is without risk. Approach robotics and nuclear with clear-eyed realism. Execution at scale is hard. What works in lab can fail in the field. Adoption can be slowed by labor and regulatory concerns. Chips are cyclical and geopolitically exposed. Expect volatility and national security-driven policy risk. Nuclear faces public perception and regulatory hurdles. Licensing, permitting, and legal challenges take time. Projects require immense upfront capital. Delays can harm returns. Favor experienced management and strong balance sheets. A sober assessment of risks, and who can manage them, is a competitive edge. The market narrative of 2026 departs from 2025. Virtual dreams give way to physical execution. Two interconnected forces form the backbone: intelligent robotics and reliable nuclear power. They address the needs of the next industrial revolution: intelligent action and constant power. Hallmarks of top-tier investments: tangible assets, long-term service contracts, defensible engineering and manufacturing scale. Capital is beginning to move. Follow it, from code alone to hardware, software, and energy together. Invest in the machines and the power that make the real world run. The future is not just being coded, it is being built.